In this week's housing market update, we're going to talk about some important things. And this video is for you if you want to know, one, where the market's at, but more importantly, if you're a homeowner and you're getting home warranty scams, you must watch this video. And if you are in a position or you know somebody in a position where they may be looking at doing a short sale or somebody's recommending they do a short sale, this video and the next video are for you, because we're going to get right into that, man. There's some important stuff that you may not know that will help you out. Let's get going. Let's talk about the big three. Prices are steady. Although I tell you what, there are some great homes out there right now, certainly on the leeward side of Oahu, for you home buyers that are offering credits, that are lowering their price, really giving you an opportunity to move in with truly no money out of pocket. Prices are steady. Inventory is up. We'll talk about new home sales inventory being up and rates. Hey, I tell you what, I love this. Rates are down. Let's break down some of the big news coming out. All right, we're going to talk about what moved the market this week. We're going to talk about the home prices across the nation breaking a 7-month winning streak. I'm going to also show you how new home sales have collapsed. And guess what? We had a big inflation report come out this week. And what happened? Inflation was up, and there's no surprise there. It didn't surprise anybody, and interest rates didn't go up because of that. Scam alert. Yes, the infamous home warranty. If you own a home, whether you're VA or not, if you own a home, you're getting these left and right. And I'm going to tell you what not to do and what to do, all right, as we get into this. And then struggling homeowners. There's a lot of struggling homeowners right now. I have heard that 1 in 4 homeowners is in a possible short sale situation. That's not good for anybody in this market. But I tell you what, doing a short sale, it could be, and it probably is, your last resort. And we're going to have a VA rates. It ain't all bad news, people. We're going to talk about some VA rates. They are down this week. Yes, they are. Woo, raise the roof. Can we keep it up? All right, let's get going. All right, all eyes, folks, are on the Middle East, as you know what, as it has been. And if you're wondering what drove mortgage rates this week, it wasn't housing data. It wasn't home sales. It wasn't even the Fed. It was the Middle East. Every headline that came out of Iran moved oil. Luckily, this week, a lot of it was movement down on the talks of opening the Strait of Hormuz. There was international pressure abound from everybody to get the Strait open, because 20% of the world's oil comes through the Strait of Hormuz. And it's not the US that's using it, it's China using it, it's Russia using it. There are many countries that use oil from the Middle East, and the Strait of Hormuz is a vital sea line of communication, and it has to be free. There isn't a single sea lane of communication that is tolled, and guess what? Iran knows that, and we're putting pressure on them to open it up, no tolls, and we may be making progress. But again, I've said before, talk is cheap. And you know what? I tell you what, rates are down. We're still above 6%. The quickest way for us to get back below 6% is to get that straight open. We get that straight open, we get oil prices down, we get inflation going back down. And Iran says it may be 30 days before they get the straight open. Not exactly sure why. Maybe some mines that they've been laying, but I know that we've been taking care of some of their mine layers and putting them at the bottom of the sea. But really, that's been the big mover of interest rates this week. It's the supposed progress towards peace in the Middle East. Let's look at the Case-Shiller Home Price Index. This is the gold standard for home price appreciation across the country. Home prices are down 0.2% seasonally adjusted, and that breaks a 7-month streak of home price rises that we've seen. Even in the 20-city index, we saw a drop. So not very good news. And guess what? This is for March. And this is at the beginning of the war in Iran. And really the impact of oil wasn't felt, because homes that closed in March, really they locked in February. So we will see the true effect or the true impact of the war in Iran probably with next month's report that shows April's home sales. And you know what? Here's the crazy thing, folks. Home prices typically, they start to rise March, April, May, June as we get into the summer, because you have a lot of people moving, you have a lot more activity, people putting homes on the market. And if we see some more decreases, guess what? That might be an opportunity for buyers, because that's going to mean there's more inventory out there and maybe some lower prices too. Let's look at new home sales. Ooh, baby, this one hurts, man. 682,000 pace in March. down to 622,000 in April. That's a big drop. This drop year over year as well is over 11%, 11.3% drop year over year, and not even the incentives that home builders are using to get people into homes are working. I will say this, it is working for some of my clients who are actually going into new construction. But you know what? I think sometimes they're settling because some of these homes, I don't necessarily know if I will be buying. But you know what? Home ownership, turnkey, it's not a bad thing, especially if you can get central air and you get some great incentives as you move into your home. So that said though, you know, with that negative news, home prices are still up. All right, up 8% month over month to 423,000. So slowing down, but prices are still steady. Prices are not falling off a cliff. We just are getting more inventory. And speaking of inventory, we got inventory is up from 8.5 months of inventory to 9.4 months. So what we're seeing here is new homes are sitting longer. Again, the builders, they're not going to build more homes, folks. All right, because they need to sell the inventory. Inventory that doesn't get sold is money that the builders lose. So they're trying to get rid of that. 489,000 new homes for sale. That's pretty stable for this time of the year. It's up from like 481,000 in March. But we're not even close to what we need to meet the demand for housing across the country. So really, really important new home sales report. This is for the month of April, 2 full months into the Iran war. Inflation up, rates up, everything is slowing down. PCE, the Personal Consumption Expenditure Report. This is the Fed's favored measure of inflation, and their goal is 2% core inflation. Well, guess what? We're not going in the downward direction right now. We're going up. And there are no surprises here, though. The expectation was that headline inflation would be at 3.8%, and it was. And that core would rise from 3.2 to 3.3%, and it did. Now, core, what's the difference between core and headline? Core strips out food and energy prices, right? Because those are more volatile and they change. So the core strips those out. But this was exactly as expected. Unfortunately, the expectation was they were up. But you would think on that report that interest rates would possibly go up, and this report came out on Thursday, but they didn't. You want to know why? Because we had the second look at first quarter GDP, gross domestic product, that came in and it dropped from 2% down to 1.6%. And let's remember, this shows for the first quarter, this shows that the economy was starting to slow before we went to a war in Iran. So that news there has actually helped interest rates to come down a little bit. And here's the other thing. From the GDP, we saw that consumers are feeling the pinch. Savings rate is down from 3.2% to 2.6%. Why? Because people are having to spend more money due to higher costs for fuel, higher costs for goods, higher costs for services. While the inflation was up, the report was not good for the economy, and that is the reason why at the end of this week we're seeing interest rates come down a little bit. Not falling off a cliff yet. We really need oil prices to come down even more. We need peace in the Middle East for interest rates to get down below 6% again, I think. If you get a letter in the mail that says final notice, immediate response required about your home warranty, do not call that number. These mailers, they use your lender's name, they give you a fake expiration date, and they make it look like it's from the government even. But you know what? It's not. It's a private home warranty company, and they are using fear to get you to pick up the phone. And if you do call, they'll tell you your home warranty is legally required by your lender, that if you don't sign up today, your house could get red flagged and can't be sold or refinanced. All of that, my friends, is completely false. Here's what your lender actually requires. Homeowners insurance. That's it. All right, a home warranty is an optional service contract. You are never legally required to have a home warranty, ever. If you get one of these, toss it. Don't call. And if you've already talked to them and they're being pushy or rude, report them to the Better Business Bureau or the FTC. You can also call the Hawaii Office of Consumer Protection at 808-587-3222. And if you work with me and you get these and you're questioning whether or not it's legit or not, just text it to me, email it to me. I will tell you exactly what to do. Remember, I've done this before and I help all of my clients. My job as your lender starts after you close. I'm gonna make sure you do not make those mistakes that many people make by answering the phone and by getting into these contracts. I just spoke to this one warranty system, and they're gonna charge you $287 a month for their home warranty service, and it's $75 a charge. Now, don't get me wrong, I'm not saying home warranty services are bad, but predatory home warranty services absolutely are. That number again for the Hawaii Office of Consumer Protection, 808-587-3222. Make sure you have it and give them a call. Let me tell you, these people, I called them, they hung up on me. I was just playing with them. They hung up on me when I started to question. Why? Because they know they're not legit and they want to take advantage of you. Now let's talk about something that some of you may be going through, and let me tell you what, this is a big deal. So listen good. Listen, Linda, listen. All right, well, let's talk about VA short sales. It's not really a short sale. What it is a VA compromise sale. The words are interchangeable, but it's a compromise sale. And I've had a couple clients come up to me and say, hey, my realtor's saying I should short sell my home. Don't do it. As a matter of fact, when you get a realtor that says that, you probably want to get a second opinion. Here's what happens when you short sell. Your credit score is going to go down. The average is from between 85 and 160 points. It's going to impact your credit score for about 7 years. And guess what? Here's the crazy thing. The cost to call your loan servicer, which may provide you the answer, it's $0. The cost to call me, your loan officer, it's also $0. So what happens? Well, the VA, again, calls it a compromise sale, and here's exactly how it works. Basically, if the veteran owns more on the VA loan than what the home is worth, the VA can step in, they pay the lender the shortfall, this is called a compromise claim, and the sale closes. It is a VA's official version of a short sale, and the two terms, again, are interchangeable. Here's what happens. So the VA contacts the servicer. The VA's demonstrated financial hardship. Maybe they got a PCS, maybe they got a job loss or a divorce. Right now, a lot of it has to do with people PCSing. The VA and the lender will review the property at fair market value. So they're gonna do an appraisal, all right? The VA is gonna do an appraisal to make sure that they know the value of the home. And then the sale closes and the VA will pay the compromise claim. The veteran's entitlement becomes tied up. It's not forgiven. You don't get that entitlement back. It is tied up. And trust me, you will see it on your certificate of eligibility. But what does that even mean? So what happens to your VA home loan benefit after a compromise sale? Well, one, the VA is going to pay the compromise claim. This is the shortfall to the lender on your behalf. The paid out amount becomes tied up entitlement. All right, it's not forgiven. You may only have basic entitlement left for a new VA loan. In some cases, and I've seen it where, especially in Hawaii, you don't have enough entitlement left to actually buy a home with no money down again. You know, short term, the short sale made sense, but long term, you've robbed yourself of this incredible benefit that you have. In Hawaii's high cost market, basic entitlement alone is rarely enough for a no down payment purchase. So how do you restore your full entitlement? It's only restored once the VA is repaid in full. So let's take a look at this scenario here. So there's a $50,000 shortfall, and the VA pays that compromise sales claim to close your short sale. Your max entitlement was $127,600. Now you've lost $50,000 of that entitlement. So you have $77,600 in remaining entitlement. Your max no money down entitlement remaining is basically 4 times that $77,000. So $310,400 is your remaining no money down entitlement. Now let's look at the home price in Hawaii. You're looking at $800,000 home. The down payment needed for you to buy that home is going to be $122,400. Now, that's going to severely restrict your ability to buy a home in the future using this hard-earned VA benefit. There are other options. All right, before you do anything, make this one call. Call your loan servicer first. request the loss mitigation department, and ask about all options available to you before you have a realtor conversation. And trust me, know the realtor red flags. A realtor who's demanding full commission on a VA compromise sale is a conflict of interest. Commissions are typically reduced. Get a second opinion. All right, especially on this island, there are so many realtors who are going to work with you to help you out and not basically rob you of any more money or any more entitlement because they want their full 3% commission. Engage a VA approved HUD counselor. This is free independent advice. It's not paid for by me or your realtor. All right, they represent only you. And then, you know what? Again, protect your credit throughout. Do not start missing payments. Stay current on your payments if at all possible. No late marks on top of a compromise sale dramatically improves your recovery timeline for your credit score. And you know, the VA Homeowner Assistant Hotline and the HUD Housing Counselor, their phone numbers are below. And you can always go to benefits.va.gov/home loans, and you can get information there as well. And let me tell you what the other option is. So one of the alternatives, and some people say, I don't want to do this, but I've done it. I'm not going to tell you to do something that I've never done. I owned a home during the Great Recession, and my home value dropped from $390,000 to $330,000. And I couldn't sell my home. I could have foreclosed, but that wasn't an option because I'm not a quitter. All right. And I ended up paying out of pocket. I kept the home and I paid the difference in the rent and the mortgage out of pocket. What that did for me, I tell you what, I didn't use my VA loan, but if I had used my VA loan, my VA entitlement would have stayed intact. There had been no compromise claim filed. Also, there had been no credit damage because my mortgage payment was getting paid every single month. And remember this, short-term pain, long-term gain. Hawaii home ownership show the value in Hawaii home ownership is the value and appreciation over time. And I just had a client I was talking to, and we were having this conversation. He was like, Larry, you told me when I bought, if I'm not going to own the home for 5 years, there's no guarantee that I'll be able to sell for profit. And unfortunately, he's actually moving 3 years later. He thought he would stay here longer, but he had another job opportunity. And we've had this conversation, and thankfully he called me because now he's not considering doing a short sale. And that rental income potential, it can offset the payment, all right, while you regroup. Yeah, you're paying some out of pocket, but you're not losing that money, all right? You're investing that money into your home. It's like a TSP. You're putting out maybe $500, $800, $1,000. Your tenant is putting $2,000, $3,000 towards that piggy bank that you own a home. It is the most powerful long-term move to keep the home and pay out of pocket. Another option is to bring $30,000 to $40,000 to cover the shortfall. This is another clean exit, and there is no entitlement loss. You basically, here's what's going to happen. You're going to sell the home. There's a payment gap. Maybe it's $30,000, maybe it's $40,000. You pay that at closing so you don't do a short sale. Again, that is better. You're doing a standard sale. You're paying the loan in full. There's no short sale notation on your credit report. It is a clean exit. All right, your VA entitlement is fully restored immediately after closing. There is no waiting period. You can use your entitlement immediately after you sell, and it's often cheaper than the long-term cost of lost entitlement. Now, I will tell you this: these are two options that are better than short sale. Personally, I would keep the home and pay out of pocket, especially if you know you're going to have to bring in $30,000 to $40,000. Think of it this way: you paying $1,000 out of pocket every month. All right, you got 30 months before you've lost that 30, or you've used up that $30,000 you would have had to use to pay off to pay off the loan in a standard sale. All right, in 30 months, what could happen to the home price appreciation? I will tell you this: if I would have held my home, all right, that I could have short sell. I actually sold the home and I sold it for I made maybe $60,000 on it. All right, and that's because I had so much equity built up in the property by the time I sold it. If I would have held that home for another 2 years, actually not even 2 years, another year, I would have made over $150,000 on the home. All right, but I had my short-term blinders on. I wasn't looking at the big picture. And the big picture is, if I would have held the home for another 2 years, I would have made over $250,000. I sold it for $376,000. Today it's worth nearly $600,000. My biggest mistake in real estate was selling that home. I didn't come out of pocket, but this goes back to keeping the home and paying out of pocket, a little short-term pain for a lot of long-term gain. All right, hey, again, I'm not gonna tell anybody to do anything that I wouldn't do. Your VA entitlement was earned. Don't lose it due to a short sale. If you had any questions or you're concerned about not being able to sell your home or having to do a short sale, text me, short sale. I will reach out to you and I will help you come up with the solution that makes the most sense for you, because everybody's a little different. And let me end with this, folks. The financial damage of a short sale is legit. And here's how long it lasts. There's no penalty on a standard sale. All right, compromise sale, you're looking at about 7 years on your credit report, regardless of the exit type. You have a higher credit score, that is going to equal a larger raw point drop. If you have no missed payments, well, that's good. It limits the damage and it will allow you to have a faster recovery. And if you do a deed in lieu of foreclosure or foreclosure, just know your credit score is going to drop. Recovery to 660 plus is going to be possible in 2 to 3 years with discipline. And for active duty veterans, a short sale or foreclosure can jeopardize your security clearance. Protect it by staying current and engaging your servicer early. Remember, it's not your only option. Talk to your lender, talk to the VA, talk to me. I'm here to help you out. Remember, you have options. You've earned this benefit. Don't lose it. Now let's talk about VA rates. As we end this, we are back below 6.25%. You can see it. We've had a pretty good week of rates coming down. That's great news. The continued talks of us open Strait of Hormuz are really what's driving interest rates down, slowing down the economy, actually helping rates to continue to come down. That's great. All right, we're about 0.4% lower this week than we were last year this same time frame, and that gap is getting wider. Hey, next week is jobs week. Will we see a drop off in jobs? All you hear right now is talk about AI is taking jobs, but I will tell you this, the ADP weekly job report that comes out is projecting probably to about 155,000 new jobs in the private sector next week. If that is the case, that's a very solid jobs report. Shows that the economy really is still strong. We'll see. And then obviously on Friday, we have the Bureau of Labor Statistics jobs report. That will move the needle, folks. But nothing's going to move the needle like peace in the Middle East. Have a great weekend.